Let's start your investment journey.
Hi, and welcome to another edition of our weekly market outlook report for the week starting Monday, the 5th of July. We have a shorter trading week ahead of us due to US markets closure for Independence Day. The week starts with slow economic calendar on Monday. On Tuesday, we should be on the lookout for RBA interest rate decision, also Eurozone ZEW economic sentiment survey, and retail sales. In the afternoon, we should be on lookout for US ISM services PMI figures. Going forward, UK housing data and FOMC minutes, in addition to Fed monetary policy report, will be closely watched on Wednesday. On Thursday, we should be on the lookout for Japanese trade balance figures, followed by US jobless claims and US weekly crude oil inventories. The week will finish on Friday with Chinese consumer price index data, UK GDP figures for May, manufacturing and industrial production, and Canada unemployment rate and average hourly earnings. Now, let's take a look at few markets. Let's start with the Bitcoin. Bitcoin is moving sideways over the last month and a half, capped by 40,000 level and supported by 30,000 to the downside. The current price action appears to be supported by 33,000 to the downside. If we see a loss of that level and a gradual move lower, that could open the way for the continuation of this sideways move and another retest of 30,500, possibly even 30,000, maybe even 28,000 to the downside. Alternatively, if we see a rally from the current 33,000 and a gradual move higher and an end of day breakout above 36,000, that could open the way for the gradual move higher, a retest of additional upside resistances towards 37,350, possibly even 40,000 again. This is German 30 or the DAX index, which is uptrending quite nicely. The current price is supported by longer term daily rising support trend line, and the key trading level is at 15,520. Pullbacks to that level and a rally from there, or a gradual move higher from the current levels and an end of day break above 15,760, 15,800, this current intraday all-time high, could open the way for the continuation to the upside, targeting new all-time highs, and your guess is as good as mine, 15,900 or even higher. Alternatively, if we see a gradual pullback and an end of day close of 15,500 support, a retest of that level from underneath as a newly found resistance, that could trigger a deeper corrective pullback, targeting additional supports at 15,370, possibly even 15,300, signified by this swing low from 21st of June. Nasdaq US Tech is uptrending quite nicely, creating new all-time highs on daily basis over the past 7 or 8 trading sessions. Key trading level going forward is at 14,540. The current price is supported by a rising trend line and also the cluster of these previous highs and lows around that level. Pullback to that level and a rally from there, or a gradual move higher and a breakout above 14,800 could open the way for the extension to the upside, targeting new all-time high, and these resistances on the upside are complete guesswork at the moment, because this is uncharted territory. So 14,900 or 15,000 could be logical level of interest. Alternatively, if we see a gradual pullback and a loss of this key trading level at 14,540 and a retest of that level from underneath, that could trigger a deeper pullback, targeting additional support at 14,300, possibly even 14,250. Euro dollar downtrending at the moment, although we are seeing a little bit of a divergence with the price making lower low and daily stochastic is making higher low. This is the intraday 4-hourly chart. We saw a gradual move higher. This is a morning star reversal candlestick formation, which was triggered by the reaction to Friday's non-farm payrolls. Key trading level going forward is at 1.18. That's a major support at the moment. Key trading level to the upside is at 1.19 on the upside. Push higher and an end of day close above 1.19 could open the way for a gradual move higher, targeting additional resistances towards 1.20, 1.2050, 1.21. Alternatively, if we see a rally and a rejection or a gradual move lower and a daily close below these lows at 1.18, that could open the way for the continuation of this selling pressure, targeting additional supports at 1.1750, possibly even 1.17 to the downside. Sterling dollar had a fairly similar reaction. The combination of these two candles is bullish engulfing. This is the 4-hourly intraday chart, but the picture is very similar. We saw an oversold bounce back after that non-farm payroll numbers came out and triggered US dollar volatility. Key trading level for sterling dollar is at 1.3750 low. On the upside, price is capped by 1.39. A push higher and an end of day close above 1.39 could open the way for the continuation to the upside, basically a short squeeze or oversold bounce back into additional resistance at 1.40, 1.4050, possibly even 1.41. Alternatively, if we see a rally and a rejection or a gradual move lower and a loss of these current lows, an end of day close below 1.3750, that would negate the oversold bounce back outlook, potentially opening the way for a deeper corrective move towards 1.37, 1.3680, possibly even 1.3650. Dollar yen is uptrending quite nicely, although we are seeing a corrective pullback here. Key trading level going forward is at 110.50 to the downside. Pullback to that level and a rally higher, or a rally from here and a breakout above 111.60 could open the way for the continuation to the upside, targeting additional resistance at 112, possibly even 112.50. Alternatively, if this corrective pullback continues, so we see a pullback and a loss of these current lows here at 110.60, that could open the way for a gradual move lower and possibly a retest of this rising support trend line at 110. Gold consolidating sideways. Key trading level is at 1780. This potentially looks like an attempt to create an oversold breakout to the upside. This still looks like a sideways consolidation to me. Key trading level on the upside is at 1795 and 1800. There is a zone of about $5 in price there. An end of day breakout above 1800, possibly a retest of that level from above as a newly found support, could open the way for a gradual move higher, targeting 1817, 1830, 1838, possibly even 1850 resistances on the upside. Alternatively, if we see a rejection here and a gradual move lower, a dip below 1770 would open the way for the continuation of this sideways move, targeting additional support towards 1760 and 1750. Crude oil, fairly bullish reaction to the upsides. Nice structure here with the market creating higher lows and higher highs. The price is supported by rising trend line and multiple moving averages. Key trading level going forward is at 73. That's a major support to the downside. So therefore a pullback to 73 and a rally from there, or a rally from the current levels and a breakout above 76 could open the way for the spike higher, continuation of this uptrend, targeting additional resistances at 77, 77, 80, possibly even 78, 60. Alternatively, if we see a gradual move lower and a dip below 73, an end of day close below that level, retest of that level from underneath as a newly found resistance could open the way for the retest of 72 to the downside. Thank you for watching, thank you for listening, stay safe and happy trading. Bye for now.
Let's start your investment journey.